Hey everyone, this is Rashad, the Wealth Building Educator, back with another video. See, I want to thank you all for the support that you have given me over the past several months. We are almost at 800 subscribers. You know, I still remember when I had my first subscriber. So to almost be at 800 is really special to me. That means that there are anywhere from 700 to 800 people that I'm able to help on a daily basis with these videos. And I have been receiving some really positive feedback. So check it out. I'm going to show you the t-shirt that I have on. So if you look at this, that says VTSAX. And that says in chill. VTSAX in chill. Let's talk about that for a second. When people in the FIRE or FI community talk about VTSAX and chill, what we basically mean is for anybody who is a novice investor or even an experienced investor, we're basically talking about putting your investments into the index fund VTSAX and just kind of chilling out, just letting the money sit there and ride the waves and just let it do what it do. That's what VTSAX in chill means. What is VTSAX? Well, it is my all-time favorite index fund. And it's actually the all-time favorite index fund for a lot of people in the FIRE community. VTSAX is an index fund that basically tracks the entire market. It is the total stock market index fund for Vanguard. There are a lot of index funds out there, but this one actually tracks the entire stock market. And the reason why VTSAX is so special to me and so many other people is that, it's one of those set it and forget it kind of investments. I often have said, and I've even heard from a lot of individuals such as J.L. Collins and a lot of other financial gurus, that the most important part of building your wealth and building your financial future is not necessarily where you put your money, but the fact that you do something with your money, the fact that you don't have your money going towards debt every month, the fact that you don't have it sitting in a very low rate savings account or money market account, the fact that you're actually investing is more important than where you are investing. A lot of people don't understand the difference between stocks and bonds and ETFs, mutual funds and index funds. That's a topic really for another day. If you come to me and you are asking for my coaching advice and you're asking me, hey, Rashad, where should I start? Where do I put money? I have no idea what to do. I know nothing about investing. I'm lost. I don't know what to do. The first thing I will tell anybody to do, first of all, is going to be moving forward to watch this video. But I will tell them, until you have a better idea what you want to do, or even after you know what you want to do, VTSAX is the way to go. VTSAX and chill. And as I said, that's basically you just putting your money into VTSAX and trusting the process. We will go a little bit over, how VTSAX works, but some of the main components about VTSAX, first of all, is, as I said earlier, it invests in the entire stock market. When I first talked to J.L. Collins about the fund, if I'm not mistaken, there were about 3,500 to 3,600 stocks that were, all in that made up VTSAX. When I checked yesterday, it was about 4,100. So as you see, as funds are added, as stocks are added to the market, they're also included in VTSAX. Another great thing about VTSAX is that it is self-cleansing. What does self-cleansing mean? Well, that means that as stocks come into the market and stocks fail, they basically fall off of the index. And you no longer have to worry about that particular stock. And as I said, there are so many different stocks that are inside of VTSAX that you have a great opportunity for a lot of them to be successful. But for those ones that are, not successful, they'll fall off the index. So let's suppose you put $100 into VTSAX, or let's suppose you put $100 into one particular stock and you don't put it in VTSAX, you put it in a stock. and that stock completely flames out, you lose $100. But let's also suppose you put $100 in a stock and that stock goes to $1 million or $100,000. If you kind of look at some of those, smaller stocks on VTSAX, you have a really good chance that, some of them are gonna become successful, which is why a lot of people choose VTSAX over the Vanguard 500 fund. And we will actually compare the two funds, but VTSAX really is the way to go. So if you are a novice investor and you have no clue what you're doing, obviously there are no guarantees in the stock market, but you can rest assured that over the long haul, VTSAX will be successful, and a lot of people wonder, well, how do you know it's going to be successful? Well, for the most part, you can't make any guarantees, as I said earlier. At the same time, we know that for every stock in VTSAX, which is about 4,200 stocks, as I said, 41 to 4,200, for every single one of those to be unsuccessful and to go to zero, I think you got a lot more things to worry about than your money at that point. You're not thinking about your investments. You are thinking about, is the world about to end or something like that? So let's go ahead and take a look at VTSAX. And if you want to actually open an account with Vanguard, how you will go about doing that. But let's go ahead and get started. So here we are at the Vanguard website. And right now I'm going to actually look at VTSAX. So as you see right here, VTSAX, the Vanguard Total Stock Market Index Fund, Admiral shares. And if you go to the website, it's actually going to give you an overview of the fund. It just gives you information that you might not necessarily be interested in. But as it says right here, it was created in 1992. So you have a long track record. And as it says, it gives you exposure to the entire US equity market, including small, mid, and large cap growth and value funds. So if you come over here to fund facts, as we see, the expense ratio is very low. It is 0.04% expense ratio. Compare that to if you have a similar, actively managed mutual fund, you might be looking at 0.89% or maybe even a 1% fund. So this is just super cheap to own. Now, I think one of the things that might give people issues with VTSAX is the minimum investment. The minimum investment is $3,000. So if you want to go ahead and, get some skin in the game where VTSAX is concerned, you're looking at needing $3,000 to get in. Now we are talking about index funds right now. So there's an ETF version, which will be a lot cheaper to get your skin in the game, get your foot in the game, but we're not going to really get into that right now. But just to get started at VTSAX, you have to have $3,000. And I can show you some workarounds in order to, get a mutual fund, or get an index fund. In a little bit, I'll go ahead and do that. But, as of today, you're looking at a price of $115.23. That's up $2.27 from earlier today when I looked, when the market closed yesterday. It's such a volatile fund, just like the market. The market is highly volatile. There are no assurances or anything when you talk about investing your money in the stock market. As you see, the yield on that is 1.16%. And then you come down here and you see the hypothetical growth of $10,000. So let's suppose you put $10,000 in 2011. Look where you would be right now. That's if you never invested another dime in it. And look at these returns. So let's go ahead and change this to view as table. So as you can see, the total stock market, VTSAX, 32.08% over 1 year, 16% over 3 years, 16.87% over 5 years, and 16.6% over 10 years. So over the last 10 years, it's had a very solid track record. And this is included with the COVID situation as well when the market dropped and then it quickly recovered. And when you look at since inception, and it is actually 8.26%. And it just tells you right here, it is comprised of 4,156 stocks. And if you look at the 10 largest holdings, which are below, it is 26% of VTSAX. So you'll see Apple, Microsoft, Alphabet Inc., Amazon, Tesla, and all these other companies make up the top 10 holdings in VTSAX. And then you go to this tab. There's just so much you can get lost in these various tabs, you know, and I'm such a boring investor that I don't even really pay too much attention to this that much. But see, I do like looking at the 52-week high and the 52-week low. So the high on November 8th, 2021 was $118.14. The low on January 4th, 2021 was $93.35. So one of my favorite couples that talks money is Our Rich Journey. You could check out their stuff. They have some stuff about VTSAX. And one thing they always say is, you know, the market always goes up. You know, it's going to go down here and there, but when you look at various trends, and at the end of the day, it's going to go up. The market's going to go up. VTSAX is going to go up, and the market as a whole is going to go up. It doesn't go up consecutively every day or every month, but when you look back 10, 15 years ago, or any 5-year period, for the most part, you're going to see an improvement. So this just shows you a bunch of information, portfolio and management. Then it also, you can go here and look at the fees. And if I were to say, you know, there was one issue with VTSAX, it would be the minimum $3,000 fee, or the minimum $3,000 to get in. So let's look at expenses real quick. So if you were to look at a similar fund that was managed, you're looking at, like I said earlier, close to 1% as opposed to almost 0% total stock market fund, since that is an index fund. And you could look and see how much money you'd be saving over 10 years. And that's huge. So this is just basic information when you were looking at VTSAX. Now, before I compare this to the other fund, the 500 fund, so let's suppose that you do not have $3,000 to get started. Let's suppose you have $1,000. So let me show you an option that I also refer to people. So we're actually gonna go in here and we're gonna look at Vanguard, and then we're going to go right here where it says personal investors. And then we're gonna go to this little search engine, and we're gonna type in retirement. So what I like to do is push it as far out as I possibly can. Retirement, let's say, I believe they have a 2065. They might even have a 27. Let's say if they go that far. You know, so they have 2065. Now, 2065, as you know, that is 44 years from now. And I hope there's no adults listening to my channel that have to wait till 2065 to retire. So let's look at this real quick. Now, the reason I like to recommend this to some of my people is because notice the minimum investment. The minimum investment, rather than $3,000, is $1,000. You see, you know, same risk potential. It's a 4 on the scale. And I like to be around a 4 because that just, obviously, the higher the risk, the higher the reward, as you see on the scale. So this is actually a target date retirement fund. It's classified as a life cycle fund. So when you look here, let's go to what it is made up of. So this fund is made up of almost 54% VTSAX, and then about 37% of the total international stock market. So you're looking at around 90% in the stock market. Now, obviously, if you are just doing straight VTSAX, you don't have any exposure to the international stock market. However, if you're doing this fund, you have plenty of exposure to the international stock market. So, this is actually a fund that some people will stick with forever, because as they get closer to retirement, it automatically shifts. I'm not a fan of the bonds, because as you get older, you're going to have more money invested into the bond market. And I'm just not a fan of it for various reasons. I like to focus on the stock market. I'm comfortable with the ups and downs of the stock market. I believe ultimately that, being 100% in the stock market is okay, especially if you have, a lot of your money in VTSAX. I'm just a huge fan of the fund. So as you see right here, so much of the fund is made up of VTSAX, and you have some in the international fund. So if you don't have your $3,000, I think it's a good idea to come up with $1,000 and put it into this Vanguard Target Retirement 2065 fund. And then once you get $1,000, once you get $3,000, you can go ahead and go all into VTSAX. And one benefit of that also is that you're going to go from 0.15% expense ratio to a 0.04% expense ratio. So we're not going to go through all of the price performance and all of that stuff with this one, but let's go back to this one. So there's another fund that is very similar to VTSAX, and that is VFIAX, and that is the Vanguard 500 index fund. So these are super duper close. Let's look at the difference of these funds real quick, because some people are going to say, you should do VTSAX. Some are going to say that you should do, VFIAX. VFIAX is made up of, if I'm not mistaken, it's 512 funds. 512 funds as opposed to VTSAX. So that should be coming up here in a second. Yep, here we go. Here we go. Here we go. Yep, here we go. So here we go. It's 512 funds. So if you look at the 10 largest holdings, it's the same exact holdings as VTSAX. Same thing. So the difference with these two funds, let's go back to the comparison. The difference between these two funds is basically that VTSAX is going to give you a better chance to have those smaller companies that may explode, because VFIAX is basically 512 companies as opposed to almost 4,200 companies. So obviously, if you have 4,200 companies, you have more opportunities for more companies, more stocks to be successful in the long haul. You also have a lot of companies that are going to end up being what J.L. Collins likes to refer to as dogs. They're just going to drop off the index, as we said earlier. And, with VTSAX, I like it because it gives you more opportunities to have more successful funds in the long run. But as you can see, the top 10 holdings are the exact same, right here. So if you look at VTSAX, only 26% of the top 10 holdings make up the index, and in the Vanguard 500, 31.5% make it up. So this just basically goes through everything with you. Now, ultimately, people will tell you that regardless of which one of these funds that you happen to choose, you're going to end up very, very close in the long run. you're going to end up very close in the long run. It's good. Even with the charts, they're very similar. So let's look at, average annual return after taxes on distributions and sale of fund shares. VTSAX comes out ahead in 1 year, 3 years, 5 years is a little less than the 500 fund, and 10 years is basically identical. Since inception, VTSAX is a little higher. So yeah, I like VTSAX. It doesn't guarantee that they're going to be higher in the long run, but they're like almost identical funds. And let me just show you the growth of $10,000. So if you look at the growth of $10,000, look at it like you can barely, they're like almost identical. So the bottom line is I'm a VTSAX and chill. I'm a, recommend anybody else to VTSAX and chill, but either way it goes, you're going to be okay. Hey, I appreciate you all for continuing to rock with me and continuing to support the channel. If you feel this content will be beneficial to anybody that you love and care about, and you believe that, the things I say and the people that I have the opportunity to get their expertise from, if you believe that stuff will be beneficial, please continue to share the content and subscribe to the channel and provide any feedback that you may have in the comments. I'm always looking to improve what I do. I'm always looking to lift as I climb and help others to get out of any negative financial situation and to climb their way to the top, because I believe that we need to try to pull as many people as we can to the top with us. There's plenty of room at the mountaintop, and I believe that we can get there. We just have to have these basic education. We have to be able to take these basic steps to ensure that we're successful in our financial journeys. Once again, thank you for checking this video out. I really hope that you got something from it, and I look forward to hearing from you. Take care.